Hey everyone, welcome back to a new video. If you're new here, my name is Emeka. I currently work as an analyst at a top investment bank, and today's video I'm going to cover my beginner's guide to personal finance. Since I started this YouTube channel, one thing I'm very grateful for is the amount of support I've gotten from everyone, but also the questions I get. Everyone asking me different personal finance questions like, when should I start investing? Should I pay off debt first? Like, what should I actually do? And the truth is, personal finance advice is very subjective and really dependent on your personal situation. But in this video, I'm going to generalize a bit. I want to make some recommendations for you based on what stage you are in life, and I've called this stage 0 all the way to stage 4, and depending on the stages, there's some real personal finance decisions you have to make and you should make to make life a lot easier for you in the next stage and just throughout your whole life in general. So the first stage is stage 0, and it's when you're definitely broke, like you're still at university or you just started or you're about to graduate. But the whole point here is most of your income or all of your income comes from your parents or comes from part-time jobs that you hate, such as working at a Subway, being a bouncer, maybe babysitting. The whole point here is you don't have a lot of spare income. And in most university students' mind, there's no time or there's even no point to try and learn about personal finance or even try and make any personal finance decisions. But that's not true. What you could do here is literally start investing early. And you say to me, I have no income, how can I invest? The little income you get from your parents, it could be maybe you get £500 a month or whatever you get from the government. You can do a direct debit as little as £50. So that way you actually get into the habit of investing, because at this stage, what you want to do is learn those habits. The second thing you could do, which is quite important, is learning how to budget. I get you might not have a lot of income to actually budget, but budgeting also relates to expenses. Are you making any stupid expense? Are you buying Balenciaga shoes because, I want to impress girls and those cost £700 and if I wear it, the girls will like me? P.S. The girls will like you regardless of what you wear, if they like you, and that's the truth. So as a side note, but don't make any stupid expenses. Learn how to budget. If you're in a flat share or you're probably renting at university, also get into the habit of making your payments there automatic. So your heating, water, make that direct debit, so that way you don't miss a payment and that doesn't affect your credit score. Which leads me on to the next point. At this stage as well, you can start building your credit score, which takes around 3 months to 9 months to do. But what you could do is get a secured credit card. And what a secured credit card does is, more or less, you put up money to the credit card agency. Let's say, for example, you're going to get a Barclays secured credit card. In the most simplest way, you give Barclays £200, they give you a credit card, and now you can start building credit and spend on that credit card, but obviously spend what you can pay back. But by doing these 3 things, you already start to build some sort of credit history and you already started investing, which is a positive, because I'm telling you, most people at this point are just going to parties. They've not started thinking about what their future is going to look like, which I don't blame them because it's quite hard. The last thing you do at this stage is start learning about personal finance. Listen, I studied a finance degree in my undergrad. I learned a lot about futures and options, but personal finance was more or less avoided. But with YouTube, podcasts, honestly, if you start learning about personal finance now, it's going to make you so much better by the time you actually start earning any real money. Some podcasts that taught me a lot are Macro Hard by Bilal Hafiz. He's more or less an ex-Mura equity research person. I learned a lot from him. I learned a lot from the Macro Trading Flow podcast. So just get into the habit of listening to podcasts, reading the news, knowing what's happening in the mortgage industry, knowing what's happening in the credit card industry. These go a long way, because by the time you actually start working, a lot of this stuff is not like brand news to you. You don't want the first time you learn about mortgages be where you want to buy your first house. Like, that'll be a big mistake. Now the next stage is stage 1, and this is called broke-ish, because you're more or less living paycheck to paycheck. And this is where most people are in the world. So many people are living paycheck to paycheck, and it's not entirely their fault, but it kind of is. But the truth is, you're living paycheck to paycheck because you have not adjusted your expenses to be in line with your income. But what are the most important skills you can actually develop here? What you can do is start investing a lot more every month. In stage 0, you're more or less investing maybe £20 a month, £50 a month. But at this stage, if you're earning the average salary in London, let's say that's around £2,000 a month after tax, you should be investing at least £300 of that. Honestly, you should be. If you're not, then you need to revisit your expenses and try and lower that. I understand things are hard, but you need to ensure that you're prioritizing investing over going to Dubai, over going to Spain, over going to Portugal. That's the truth. The second thing you could be doing here is building a emergency fund. And I've talked about emergency funds in length, but what you want to do here is save a small amount of money every month in addition to the investment one and put that in a high yield savings account so you earn some interest, because you never know if you lose your job, if you have an illness. You want to have at least 6 months of living expenses tucked away. I'm gonna say living, what do I mean? I mean, we're gonna have 6 months of rent tucked away and also 6 months of food money, more or less. So for most people, your rent probably be around £1,000. So you're gonna have £6,000 tucked away. Food maybe around £500. That should be tucked away. And you wanna start building that from this stage. When you went to university, you probably have debt from studying. You wanna start paying this off as well. And I think you shouldn't focus on paying too much of your debt right now. I would actually focus on investing and trying to build an emergency fund. And the last thing you could do is continue to build credit. And at this point, don't make the mistake because you're earning a lot more, you give into lifestyle inflation. Because what happens is, your university earning no money, maybe you're earning £100 a month or something, or £200 a month, and then you graduate and start working, and now you start to earn maybe £2,000 a month, and then each month when you get paid, you go and buy Gucci sneakers and Selfridges. I see you guys there. You guys are not earning a lot of money. You're spending your whole paycheck in Selfridges to impress people. Don't give into lifestyle inflation. It doesn't help anyone, and no one cares about what you're wearing. A white sneaker looks the same as from Versace or it's from ASOS. There's this white sneaker I have from Marks & Spencer. Everyone thinks it's expensive. I got it for £20 Marks & Spencer. I'm not saying you shouldn't live your life, but consumerism doesn't make sense if you have the money in your account. It literally doesn't, and you're gonna look like a fool in the future. The next stage is stage 2, and I call it kind of broke, kind of okay, because honestly, that's what you are. This is probably a couple of years after working, maybe 4 years down the line, 5 years down the line. You're kind of okay, meaning you've probably invested a lot of money and you have a lot of your emergency funds saved, but you're still relying on one income. And this is the truth for most people, which is why on YouTube, the term multiple streams of income, literally you put on a video title and it goes viral because people want to know, how can I build multiple streams of income? And this is the stage I am right now, and that's why I'm making this video. I'm trying to build a second stream of income through YouTube. And you don't have to use a YouTuber. You could do maybe start selling courses. You could even start doing Ubering on the weekends if you work for a full-time job on the weekdays. The point here is you start diversifying your income, especially with the internet. There's no reason why you can't actually try and do something. At this point, you definitely have a skill. If you made it this far in life, you should learn how to monetize that because that will go a long way. The second thing you could do is start paying off your debt a lot faster by increasing your monthly payments to that. You'll earn a lot more money now. You can afford to do that, especially if you get a bonus at the end of the year. Put a quarter of that towards paying off your debt. And to pay off your debt, you could more or less use the avalanche method or the snowball method. What do those two mean? The snowball one is basically when, if for example, you have £5 debt, £4 debt, £2 debt. You start paying off the £2 one first, even if it has a high interest rate or low interest rate, it's interest rate agnostic. You pay that off first and then the £4 one. And what that does is give some sort of mental relief, but it's not the best way to pay off debt. The best way to pay off debt is focusing on the high interest one first, because that's costing you more right now. If, for example, you have a debt of £100, 10% interest rate, I have a debt of £120, 2% interest rate. It makes no sense to focus on the £120 one. Pay off the one with the high interest rate because that's what is actually eating up your income. Now, the last thing you do is invest in more money as well in your stocks and shares ISA. Now, at this point as well, if in stage 0, like I said, you continue to develop your finance knowledge, you can start diversifying away from just the typical stocks and shares ISA. Focus on mutual funds, maybe even commodities, and some other asset classes, maybe even crypto. At this point, you start opening up your world and trying to invest in a lot more things. Now, this is stage 3, and I called it I'm okay because right now you're just okay. You have a full-time job, and at this point, you have, even if it's just one extra stream of income, it goes a long way because the income from that extra stream alone could be put towards just investing or just paying off debt. Now, this stage, you want to start paying off your debt, and I get it. It's hard for a lot of people to do this because you go to university, you study a course that, you know, when you finish, you more or less don't have access to a good job, and it's just the nature of what you studied. If you study English language, the jobs you can get from that pay well are quite limited. This is why when I made this video about the best financial decisions I made in my 20s, I talked about choosing a career for the money first and not trying to follow my passion. Up to me, I'd be a bodybuilder or something, but I knew that working in investment banking would satisfy all my financial needs. So at this point, you want to start finishing paying your debt. And the truth is, depending on how much money you make, these stages could take 1 year or 20 years, or you actually might never reach it. Some people don't get past stage 1, living paycheck to paycheck, because they don't earn enough money. They can't do anything about it. That's all they can do. They can try and get multiple streams of income, but at the end of the day, not everyone can succeed, but I want you to. You guys watching this video, if you're still at university, I promise you, pick a degree you can actually monetize from. At this stage as well, you also want to be more intelligent with your investment. What do I mean by that? You want to start maximizing your return from all your investments. At this point, you probably have your emergency fund done properly. You have some stuff in your stocks and shares ISA. Now, what other stuff can I invest in? There's crypto, there's digital artwork. You can even invest in land, stocks on property. There's a load of different asset classes, because at the end of the day, what matters is the return. I was listening to a podcast the other day, I think it was a Micro Hive podcast, and he brought someone on who was talking about investing in land and infrastructure. And this never occurred to me that you could actually invest in farmland. It just never came to my head, and that's something I'm looking into now. There's also REITs, which are more or less real estate investment trusts. So instead of actually trying to buy a property and earn rental income for that, if you buy a REIT, you more or less get exposure to the housing market or to even the renting market. So that's a good way as well. I don't think you also do at this stage, which I think you also do at the previous stage, is if your company matches your 401k contribution, make sure you take advantage of that, because it's more or less free money. And also at this stage, there's 2 schools of thought. There's a school of thought where you shouldn't need to budget, where your focus should be on maximizing your income. And this is true, and this is what I believe. As long as you're not wasting your money on Balenciaga sneakers every day or buying the latest iPhone just because, your focus at this point shouldn't be on budgeting, because if you made it to this point, I believe you're already very good with money. Your focus should literally be on trying to use that money to make more money. Investing back in yourself, going for personal finance classes, learning how to code, learning this specific skill that you can monetize on. That's what your focus should be. Now this is stage 4, and it's called cruising. And a lot of us wish we get to this point literally the next 2 years, but this is going to take time. And at this point, you've probably paid off all your debt. You're earning a good amount of money, probably 6 figures from your full-time job. Your side hustle is also returning some money. So now you can actually just focus on trying to maximize other parts in your life. You can focus on trying to actually save to get that dream house of yours. Now you can actually afford to maybe send money to your mom, to your dad. This is a stage where money is no longer the issue for you. Now you're just trying to achieve big goals, like getting a house, maybe sending your kids to school, maybe buying the latest Range Rover. And at this point, life becomes so much easier. And at every stage, one thing you should be aware of is not to give into lifestyle inflation. That will literally hurt you, because if you go from earning 2K a month to 7K a month, but if your expenses increase at the same rate, then more or less, you're not any better off. So make sure to give into lifestyle inflation. So thanks for watching the video, guys. Like, comment, subscribe. Let me know what stage you are based on what I said. And any other suggestions for videos, put down a comment, and see you in the next one.